Alright, good afternoon everyone. Today is Wednesday, February 27th, 2013. Let's go over the results of today's live trading room. We're flat. we didn't have a single losing trade, but we didn't have a single winning trade either. It is what it is. You know, some days are like yesterday where we were up $582.50 on 10 trades, and some days are like today where we were flat. That's the way it is. I can show you some stuff. I will show you some stuff. As a matter of fact, it took an extra 7 minutes to get the 2 points. I got long right in here on this up close after we closed the morning session. I got long right in here, and I took 2 points profit right here. Some of the guys were still in the live trading room and saw me do that, but that doesn't count toward the totals. All right, our totals are still where they were yesterday. Here we go. Yesterday, I had a little math mistake yesterday. I think I had added about $10 more onto the total. The total is actually $3,462.50 for the month so far. So to hit that $4,000 mark tomorrow, I really need to have a big up day tomorrow. We're going to need a lot of activity tomorrow. Let's see. So we're up 34.62 and a half. Okay, we're up 34.62 and a half on the morning. I mean on the month. Sorry, on the month. And that is, I think that's 18 trading days. That's got us there. All right. I can show you some trades. Well, first, rather than go through every single market and show you the trades, why don't I just show you how the trades work? Okay, for the people who are new here, this is what we look for on the markets, day after day, market after market. Always the same time frame, always the same indicators, always the same setups. All right, always the same risk. We also use 8 ticks risk on every single trade. All right. What we look for is the MA1, which is the blue and red line right here, to cross up above or down below over here, the BBC, which is the green line. So the MA1 crosses the BBC to give you direction. Then price pulls away from the BBC, which is the green line. Price pulls away from it, shows a little space in there and in there. Okay. Then pulls back down to test the BBC. That means touch it. All right. Touch it, and then close in the direction of the cross. So if it's an up cross, it's an up close. If it's a down cross, like this one, it's a down close. When that happens, if you have divergence down here on the bottom, divergence between the green line on the slingshot and the cycle portion of the slingshot, and the color is right on the cycle, so blue for up or red for down, then you jump in at the close of that bar. Right? I know it sounds like a lot, but it's really, you just wait for it to go up, come back down, and close up. You jump in on the up close if the color's right. All right? Over here you jump in on the down close if the color's right. That's the setup. That's what we do over and over and over again. Now, the only variation to that setup is when there is so much momentum in the market that price does not pull all the way back to the BBC, or because there was so much momentum, it moved it so far away from the BBC, when it attempts to pull back, it changes the color of the cycle. When that happens, you need to draw a trend line up the bottoms. You only need 2 bars to draw a trend line. But you draw a trend line either up the bottoms or down the bottoms. And you take a down close. If you're going for short, you need a down close on the other side of that trend line. Or an up close if you're going long, an up close on the other side of that trend line. All right? That's it. That's all there is to it. That's the end of it all. Yes, Alan, I know you won. But that's it. Okay. The the day today, it was, well, it started off. Now this is the NASDAQ. Let me show you on crude oil. All right. The day started off in a lot of chop, and it stayed that way. And then the moves that it had, you see I took a trade right here, and I got a break even on that trade. It went 4 or 5 ticks in my favor, came back down, took me out at break even. The moves that the market had, I know it looks like there was follow through, but by the time it gave us another signal, another entry another thing that met the entry criteria. I may have missed one right here, but by the time that it gave us the entry criteria, it just didn't have any more follow through. You see, it went all the way up here, gave us an entry right here. It actually gave us one right here that I missed, right there. But it gave us an entry up here, moved up a little bit, and came back and got me out at break even. Then it chopped and chopped and chopped. We had no entry criteria right in here, and then it was just really choppy right in here. There was no entry criteria in here. No, there was no chance for us to get into these markets. The ones that I did get into, I mean, crude oil, you can see right here, there were 3 times on crude oil that I went into the market and I took a break even. Okay? There was an entry over here, but this was after the close of the morning session. All right? Right in here. There was another one right in here after the close of the morning session. As soon as the morning session closed, there were a few opportunities for us, but unfortunately, we couldn't do it. The Russell early on had some nice trades, had 5 of them right in a row. But the problem with this was the ES was going into a weekly trading zone, so I was not going to take these trades with the ES going into a weekly trading zone. So I'm just following my plan, following my rules, and unfortunately it kept me out of the market all day. Okay. Yeah, I always move my stop to break even or better. Always. There was this one here that I finally did take on the gold, but I took it at 11:37. All right, that was after the close of the morning session, so that one doesn't count. But you can see the same thing. There were opportunities in here, a couple of them, but things just weren't coming together right. So I would rather not trade at all than trade in a market like this. Okay, I was looking for all these opportunities. There were some. I didn't necessarily see all of them when they happened. If I'd have known early on that the day was going to be really, really choppy like this, then maybe I would have made more of an effort to take a trade like this one over here, or some of the other ones that may have happened in here. I really don't see all that many. This one right here. But usually if the market's choppy, because we had Bernanke was speaking today and Draghi's supposed to be speaking in about 10 minutes here. On a day like that, it's almost like an FOMC day, where the markets are just really non-committal, we'll say. All right. The ES, I'll get to the ES in just a minute, but you can see there was an opportunity in here, but the markets were so choppy, I just wasn't interested in taking things that didn't come together perfectly. I missed a few of them right in here. There was an opportunity right there that I missed. I finally took this one. All right. Now that the morning session is closed, clearly there were a couple more opportunities in here. There was nothing over there, but right over here on the down close, right here, there was a shorting opportunity where we currently are. All right, that was pretty much it. I'd rather sit on my hands all day and not take a trade than take a trade when the markets are not likely to be conducive to trading. All right, you see how the NQ was just choppy back and forth across the BBC. Then when it finally had a movement up, there was no divergence. All right, it had a movement down, but the black line disqualified the trade. Had a movement up, there was no divergence. Sideways, movement down, there was divergence right in here. It gave about 4 ticks, no follow through. All right. Then we got into here. There was an opportunity to get long over here. We had divergence and everything. I didn't even have an NQ DOM up, so I couldn't take any NQ trades. But it moved up. You can see there was another one right in here. This one moved against. There was another one here that moved up. Another one here that moved up. But that was it. I didn't even have an NQ DOM open. Maybe if I had an NQ DOM open, I'd have my 2 points right now. But unfortunately, I didn't have an NQ DOM open. And on the ES, I accidentally had the wrong chart up this morning when I had to reopen everything again, and I had the 10,000 contract up here instead of a 4-tick range. And there was a nice opportunity here on the ES right here, and another one right here. All right, there was a weekly trading zone right here, 1502, 1503. All right, so there wasn't a lot of opportunity in there. No Patrick. The market doesn't. It's 4:15 my time. And that was it for the ES. Now this was the yen. I've had so many different markets on this particular chart. We were looking at the euro, and the euro didn't give any opportunity. Not once the U.S. markets opened up, the euro didn't give any opportunity. Okay, we looked at natural gas. There was a spot here on natural gas. There was one here, and there was one earlier, right in here. But I got into this one too late. I missed the trade. All right, so there were opportunities to take the 2 points. I just missed them this morning. All right, and I wasn't going to trade when there wasn't a good opportunity. The yen, I only started looking at the yen right at the end of the morning session. Okay, this down close right here is what I was looking at. Actually, not that one. This down close over here was right at the end of the morning session, and I didn't fill on it. It didn't move too fast. This down close right here after the morning session ended, I did take that, and I ended up taking a break even on it. But that was it. That was the end of our morning. We had a few trades, all of them break even. Okay. Now the fact that they all ended at break even meant that every single one of those trades went 4 ticks. All right, it gave us at least 4 ticks profit because I move my stop based on, and this is good information for everybody that's a partner who wants to know when I move my stop. I move my stop based on where the MA1 is. Like if I get into a trade, we'll say this one right here. All right, this isn't a great example because the entry was above the MA1. But once you get up above the MA1 and price moves up 4 ticks, I bring my stop to break even. If it goes up another 4 ticks, I lock something in. If it goes up another 4 ticks, I bring it up close, like behind the black line, behind the MA1, and I look to get out. In this particular case right here, though, I just put a target up at 10 ticks profit. Okay, in that case. But normally, what I would do, if say we entered this trade right here on the up close, as soon as price closed up above the MA1 right here, on this bar right here, when price closed above the MA1, I would move my stop to break even. All right. Then it gave another 4 ticks after that. I would lock in some profit. Okay. Usually, when price gets above the MA1, it's not going to come back below it until the run is finished. Okay. That's the way that it normally works. That's why I manage my risk that way. Like over here, we'll say, for instance, if this was an entry, well, let's say this was the entry up here. Okay. At the BBC, you had a down close. When you get a down close below the MA1, I would move my stop to break even. Now you see it didn't come back above the MA1 until it was done. So if I kept trailing my stop down behind the black line or behind the MA1, then I'd be out down here. All right? Just information for everybody who is a partner who wanted to know that. That's it. That's all I got. Right here on gold right now, we can draw a trend line. Up these bottoms, we have bearish divergence. A down close on the current bar would be a shorting opportunity. Okay, that's what we have. All right, that was probably one of my fastest recaps in a long time. But I think I've answered all the questions that we have going on in here, I think. Okay, and could I talk some on what to look for on days like today when it's best not to trade? You notice that some of the trades were called, but I didn't take them. Yes, I think I just kind of did that. What to look for is right when the markets open up. Right when the markets open up, if you see things, let me show you. It happened on pretty much all the markets, but when, now at 9:30, right in here, when the markets opened up, we had this run up, and we're thinking, okay, great, it's moving up, we'll just jump in, and we did, and we got a break even on it. And after that, it just started going back and forth across the BBC. This wasn't the only market doing that, all right? That was crude oil, but the Russell was doing it. Gold was doing it. The NQ was doing it. You know, the only market that didn't have a lot of chop today was the ES. Strangely, was the ES. You know, if you look at the ES on a bigger time frame here, it was a nice trending market today. Look at that. Nice trending market today. But I didn't take a single trade on the ES. I may have, had I noticed it at the time, But by the time I realized I was looking at the wrong time frame, we were already over here somewhere. Okay, and we're getting up here to this 11:12 area that Dwayne had pointed out in the live trading room. Said it looks like we're going to get right up there, and we just did. All right, I think now let me just go down to the bottom and see if I've answered. Yeah, I've answered all the questions. All right, guys, that is it. With that, we're going to wrap up the recording. And if anybody has any questions, you can email us at support@cfrn.net. Okay, cfrn.net. If you haven't taken a trial with us, you can go to www.cfrn.net/apply. Sign up for the free trial. If you are on the free trial, you need to take care of the. Well, if you were on the free trial yesterday, you should have something in your inbox. Okay, I'm telling you what it takes to become a partner. You need to take care of that. Wow, gold just totally took off. Let me show you what happened to gold.
Down $14 on the day.
Yep, this just happened to gold right here. All these bars in the last 20 seconds. And that was the setup right there. A down close right there. Okay, that's why I don't have targets on gold, because you can get into one of these things right here. It was at 16.016, and it dropped all the way down 96.6. That's just about $400 right there in about 2 seconds. Yeah, Draghi opened his mouth and whoosh. Anyway, if you're
on the wrong side of that trade and you don't have a stop, that just cost you $400. Now, when he said he doesn't have a target, he didn't say he doesn't have a stop. He said, "Oh, you got a stop."
There's always a stop. Always an 8-tick stop. Always. Here, let me blow that trade up for you so you can see the setup a little better. Okay. The down close below the trend line was right there, and the bearish divergence was right here. All right. So the entry would have been right there. Right there. All right. All right. That's it. If you're on the free trial, you need to check your inbox. There's an offer in there from us for you to become a partner. It tells you how to become a partner. We are giving away a mini iPad tomorrow night to one of the active partners. If you become a partner now, you are obviously an active partner. If you've been a partner for years, and you're still, you're maintaining the active partner status, then you are still an active partner. All right, you'll be in there. You'll be in the drawing. All right, that's it. With that, I'm going to wrap it up.